This is SpaceX, and it's about to become the most valuable company ever to go public. $2 trillion, bigger than Boeing, Airbus, Lockheed, and Northrop combined. But there's a problem. The price? 107 times sales. Nvidia trades at 28, it's losing $4.3 billion every quarter, and Starship keeps blowing up. This isn't just a space bubble, it's a space bubble stacked on top of an AI bubble, and it's being sold to your pension. In just a few days, SpaceX is going to become the most valuable company ever to go public. Not the most valuable company to ever launch a rocket. The most valuable company of any kind to ever sell shares to the public for the very first time. At up to $2 trillion, it would be worth more than the entire Western aerospace and defense industry combined. And a slice of it is being sold to you, and very quietly, to your pension. Over the next few minutes, here is why that number might be completely detached from gravity. Let's start with the raw scale, because it is genuinely hard to believe. Here are the basics. SpaceX is listing on the NASDAQ under the ticker SPCX around the 12th of June. It's selling more than 500 million shares at roughly $135 each, aiming to raise as much as $75 billion. To put that in perspective, the old record holder, Saudi Aramco, the biggest oil company on Earth, raised about $29 billion. SpaceX wants to more than double it. Now the part that should make you blink. At $2 trillion, SpaceX would be worth more than RTX, Boeing, Airbus, Lockheed Martin, and Northrop Grumman added together. Those five build America's fighter jets, its missiles, its bombers, and most of the Western world's airliners. One rocket company is being priced above all of them at once. It would be roughly the size of Google's own parent company, Alphabet, a business that earns $180 billion in profit every year. And remember what an IPO really is. The public is buying in at the top just as the earliest investors and employees finally get their chance to cash out. So the obvious question is the same one we asked about Tesla. What on earth justifies a number like that? And to be fair, unlike a lot of bubbles, this one actually starts with something real. Here's what the bulls get right. SpaceX is not a concept on a slide. In 2025, it brought in about $18.5 billion in real revenue. And most of that now comes from Starlink, the internet from space service, with over 10 million subscribers, a number that has doubled in a single year. Starlink alone made over $11 billion and turned an operating profit. The investment firm Archie argues that Starlink by itself can justify the entire $2 trillion price. Then there's the rocket itself. SpaceX launches around 70% of everything humanity puts into orbit. That is a genuine, hard-to-copy monopoly. And the next rocket, Starship, could deploy satellites roughly 20 times faster than today, multiplying Starlink's capacity almost overnight. And give them their due. The engineering here is genuinely historic. Reusing rockets has cut the cost of reaching orbit by something like 90%. SpaceX puts the total market it's chasing, broadband and mobile from space, at over $1.5 trillion. If it captured even a slice, the numbers could work. So that's the bull case, and it is not stupid. Real revenue, a real monopoly, and a credible path to a much bigger one. So, where does it go wrong? Start with the multiple. At $2 trillion, investors are paying around $107 for every single dollar of sales the company makes. Nvidia, the poster child of the entire AI boom, trades at 28. A normal company trades at 3. SpaceX is in a category of its own, and while the revenue grows, the losses are growing faster. In the first quarter of 2026, SpaceX lost $4.3 billion, about 8 times the loss a year earlier. Why? Because Starlink's profits are quietly being used to subsidize the moonshots, Starship, and a brand new bet we'll get to in just a second. And there's a detail that should sound very familiar. To grab subscribers fast, Starlink has been cutting its prices. Revenue per user is down about 18% since 2023, cutting prices to chase growth while the stock is priced for fat margins. If you watched our Tesla video, you have seen this exact move before. In Starship, the thing the whole multiplier depends on, is still in its explosive blow up on the test stand phase. The math simply assumes it works. Which brings us to the part that makes this so much stranger than Tesla, because the same man runs both companies. And it is almost exactly the same playbook. With Tesla, the stock stopped being about cars and became about a promise. Robotaxis and humanoid robots, always a year or two away. With SpaceX, the stock isn't really about today's rockets. It's about Mars, about Starship, about a future that has not been built yet. And then, in early 2026, something remarkable happened. SpaceX swallowed Elon Musk's artificial intelligence company, xAI. So now the rocket company is also an AI company. It even signed a deal to rent out computing power, reportedly worth over $1 billion every month. And there is something circular about the whole AI boom. A handful of companies invest in each other, buy each other's chips, and rent each other's computers, each deal making the next valuation look bigger. Think about what that does to the valuation. You're no longer just betting on a space bubble. You're betting on the space bubble, with the AI bubble stacked on top of it. Two of the most hyped, most expensive stories in the entire market, fused into a single stock and sold to the public at the very top. So if it is this expensive, who exactly is buying it? The answer is the most unsettling part of the whole story. Your first instinct might be that this is reckless retail investors gambling on hype, and there is some of that. Unusually, SpaceX reserved up to 30% of the offering for ordinary retail buyers. Sold straight through apps like Robinhood, Fidelity, and Schwab. Fidelity said it would open the deal to any customer with as little as $2,000 in their account. But the really big money is institutional. A week before the listing, Google alone reportedly put in $11 billion. And here's the part almost nobody is talking about. A quiet rule change that could route your retirement money straight into deals exactly like this one. In August 2025, an executive order told regulators to open up 401k retirement plans to private assets. Private companies, private equity, things ordinary savers could never touch before. By March 2026, the Labor Department had drafted the rule to actually make it happen. There is around $12 trillion sitting in American retirement accounts. A door just opened between that money and private mega valuations like SpaceX. And these private investments come with a sting. Private equity funds typically charge 2% a year, plus 20% of any profit, and they can lock your money up for a decade. For a saver who might actually need that money, in a liquid stake in a company like this is a very different animal from a simple index fund. So this isn't only day traders, it's pension money, retirement money, the most cautious savings people have, being pointed at the single most speculative valuation in the market. When a private company sells 30% to the public and the rules suddenly let retirement funds pile in, you have to ask one cynical question. Who is getting in and who is getting out? Now, defenders have one killer reply to all of this. One word: Amazon. The argument goes like this. Amazon lost money for years. Everyone called it overvalued, and it went on to eat the world. Burn cash now, own the future. It's a good argument, but it quietly assumes one thing: that the moat holds. That nobody else on Earth can do what SpaceX does. And here's the thing. The moat is already being tested at home. Amazon is pouring tens of billions into its own Internet from Space network, Project Kuiper, aimed straight at Starlink. So even before we get to China, Starlink's fat margins already have a deep-pocketed American rival lining up. So let's test that moat properly. And the real test case is sitting right there in very recent history. 10 years ago, Chinese electric cars were a punchline. Today, BYD outsells Tesla. China didn't just catch up on EVs, it took the lead. Same story with artificial intelligence. The West sold AI as a premium, expensive product. Then Chinese labs released models that were nearly as good, open source, and almost free. Twice now, the playbook has been identical. Let the Americans spend the billions proving it works. then build it cheaper, faster, and give it away to win the market. And space is next. 2026 is being called China's SpaceX moment. Chinese companies are already testing their own reusable rockets. Land Space, Space Pioneer, Galactic Energy, all racing to copy the one trick that made SpaceX cheap, and the state is building its own Starlinks. 2 mega constellations, Guowang and Qianfan, together aiming for tens of thousands of satellites, and China is bringing the same weapon it used everywhere else, price. Its rockets and satellites are being built for a fraction of the Western cost, and there's a deadline forcing the pace. International rules give China until 2027 to start filling its satellite slots in orbit, or risk losing the rights to them. Now be honest about the gap. It is enormous. In 2025, SpaceX put over 3,000 satellites into orbit. All of China managed 371, but that is exactly the gap China faced in electric cars and in AI right before it closed it. Russia is further behind. Its reusable rocket has already slipped from 2026 to 2030, but the direction of travel is clear enough. If the cost mode erodes the way it did in cars and chips and AI, then the next Amazon might instead become the next thing China commoditized. So step back and weigh it honestly. Both sides. On one side, a company with real revenue, a real launch monopoly today, and the most credible space business ever built. This is not .com vaporware. On the other side, 107 times sales price, losses exploding, prices being cut, a second bubble bolted on top, and the fastest rising competitor on Earth taking aim. And the whole thing is being sold to the public, including, for the first time, the nation's retirement savings, at the absolute peak of the hype. And there's a bigger worry. So much of the market now leans on a handful of these giant money-losing bets that a stumble by any one of them could shake the whole thing. Maybe Starship works, maybe Mars happens, and this turns out to be the trade of the century. Genuinely, maybe. But every great bubble in history had a great story. Tulips, railways, the .coms. The story being true was never the same thing as the price being right. SpaceX might genuinely be the most impressive company of our lifetime. It can be exactly that, and still be the most expensive story ever sold. So I'll leave you with 3 questions. Is this the trade of the decade, or the top of the bubble? Whose money is really at risk when it's your retirement fund buying in? And when China comes for space the way it came for cars, does the moat hold? Tell me below.